Hello and a very warm welcome, everybody, to She the People in our ongoing series, Investor in partnership with BSE Investors Protection Fund. We talk about personal finance, we bring more clarity on important financial concepts, and help women take independent decisions, be independent decision makers when it comes to the matters of money. It is my pleasure, as always, to welcome Kiran Telang, a certified financial planner registered as an investment advisor with SEBI. And Kiran works with clients across India and overseas and helps them in making smart investment decisions and simplifies their financial lives. Thank you for joining us, Kiran. आज का subject बहुत interesting है. It is a little complicated also. Can be complicated also for people who are just starting their journey. It is about equity markets. So I first welcome you and invite you to share your thoughts on the subject. And after that, we can take some questions.
Thanks, Mugdha. It's always a pleasure to be here on this show. So let's begin with a technical subject, which I've tried to simplify because it by itself is a very vast topic. But we have a limited amount of time, so let me see how we can, simplify things for people.
Sure.
Can I have the presentation, please? Thank you. So what does equity actually mean? When we talk about equity, it brings up a lot of ideas in our minds. But in a simple term, you become an owner of a company. So when you buy a share of a particular company, you are an owner to that extent. So suppose there are 100 shares of a company which are available in the market, out of which you buy 10. So you become a 10% owner of the company. So 10% of a company is huge, So like a normal person who's making investments in shares, you might not own 10%, but you will be owner to the extent that the number of shares that you're holding. Right, so that is what is equity. So it is as simple as that. And with that, because you're an owner of a business, you're owner of a company, you have to, live with the life of the company. So you will also participate in the profits that the company is making. You will also face the risk that the company is taking, or any risk that come across. You will live with that risk as well. So how do you actually make money? People equity में बहुत पैसा बन जाता है, or the other side, it is gambling. So how is actually money made in equity? So there are two ways in which you make money. One is you earn a dividend income. So dividend is basically the profits that the company is sharing with you. So because you're an owner of the company, whatever the profits the company is making, and it decides to share with the shareholders, that is what is coming to you as dividend. The second part of the gains that you make in equity investing are through capital gains. So basically increase in the stock price. तो आपने 100 रुपए का शेयर लिया है, अगर उसकी वैल्यू स्टॉक मार्केट में 120 हो गई है, तो 20 रुपए का आपको प्रॉफिट है. So both these things, give you a differing kind of growth to your overall portfolio. Dividend income जो है, you have a choice, whether you spend that or you reinvest that. So we will come to that in a moment, how things can be handled. So ये तो एक चीज है कि आपके हाथ में है कि आप डिविडेंड का क्या करते हैं. The second thing is the company, whether it decides to announce a dividend or no, it's up to them. So some companies might want to reinvest, the profits that they're making into further growth of the company. So in that scenario, either there will be no dividend declared, or there might be a lesser dividend declared as compared to other companies who are not looking at reinvesting their profits into the business. So every company accordingly will decide and announce the dividend. So it is not a right that you have, but if they announce a dividend, you will get it as a shareholder. Now, what are the biggest advantages? I mean, there is one large advantage of equity investing. It gives you inflation beating returns. तो अभी inflation beating returns तो ये बहुत technical sound करता है. Inflation होती क्या चीज है? So we know that cost of things go up. Whatever you're buying for 100 rupees today, it might cost more than 100 rupees next year. That is because of inflation. So आप एक सिंपल चीज ले लीजिए. अभी हाल ही में I just noticed that Britannia has increased the price of its white bread, which used to cost 35 rupees. Now it is costing 38 rupees. Right? So 35 से 38 हो गया है ये price. So that is a 8.5% increase. तो अब आप समझिए, दिस इज अ वेरी स्मॉल आइटम ऑफ रेगुलर यूज. नाउ इफ यू talk about larger things in your life where money is required, for example, providing for your children's higher education, if you're sending them abroad for maybe masters or any further specialized education, तो उसमें ये 35 रुपीज नहीं होगा. द कॉस्ट ऑफ दैट गोल इज वेरी लार्ज. एंड इफ यू सी ओवर अ पीरियड ऑफ टाइम, जैसे आप, अगर आपका बच्चा अभी छोटा है इस टाइम पे ना, आप 18 साल या 20 साल की एज में उनकी एजुकेशन को फंड करने की बात करते हैं, यू हैव अ वेरी लॉन्ग पीरियड ऑफ टाइम. In that period of time, the cost of the education, what it is today, will be much higher than that because of inflation. How you can notice this
Right.
is probably if you start, calculating कि हर साल आपके बच्चे की स्कूल फी कितनी बढ़ रही है. So you will see that the inflation is very high. Now, how does this impact in investing? Uh, आप एक सिंपल चीज ले लीजिए, बैंक फिक्स डिपॉजिट. तो इफ द रेट ऑफ रिटर्न ऑन अ बैंक फिक्स डिपॉजिट इज 7%, आप 100 रुपये आज डाल रहे हैं तो एक साल में आपको 107 मिलेगा. तो जो हमने ब्रेड की बात की, ब्रेड पे ही हमने देखा इन्फ्लेशन इज 8.5%. राइट. तो आपकी जो बेसिक रिक्वायरमेंट है वही मीट नहीं हो रही है. सो इफ यू टॉकिंग अबाउट लार्जर गोल्स लाइक एजुकेशन और योर ओन रिटायरमेंट, that might be hurt if you don't have investments which can beat the rate of inflation. So that is why investing in equity becomes important. And this is not important only for people who are, accumulating money for goals like children's education. It is also important for retirees. So when we think of retirees, we think of only investing in safer assets because that is the only pool of money that they have. But they are also going to live with inflation, right? Just because you're retired does not mean the inflation goes away. So when you retire at 60, you might be living till the age of 90. So you have 30 years. तो उस टाइम भी इन्फ्लेशन तो रहेगा ही. सो इन दैट सिनेरियो ऑल्सो investing in equity is required, though obviously things will change. The percentages of amount that you put in equity will change, but in equity investing is required at every stage in life. So the reason for that is equity provides inflation beating returns. So that is the biggest advantage of investing in equity. तो एडवांटेज तो हमने देख लिया, बट equity does come with risks, right? So there are these primary risks of investing in equity. We can define it as company specific risk, market risk, and investor behavior. So company specific risk is primarily if a company's business does not do well. So either they make losses or they shut down. So that is a company specific risk. So if you, amongst whatever number of companies are available in India today, if you pick up a few companies and invest your money in that, and you go wrong in your decision of investing in those companies for whatever reason, you might lose the entire money, right? The second is the market risk. Okay, you have selected good companies, but there are extraneous reasons due to which the market movements happen. There could be speculation, there could be geopolitical risks and other things which impact the overall market movement. So in scenario mein, even though you are holding a good stock, the overall market is not performing well, so you might not make profits for a certain period of time. And I think the most important thing is your own behavior. So investor behavior becomes critical in equity investing. So let us look at how actually things go and how you can manage these kind of risks. Uh, I feel that it is more important to manage risks in equity rather than just look at returns. So as long as you're not making huge mistakes, you should be fine, right? So if you look at managing company specific risks, how do you manage that? So there are two ways. One is you buy quality stock. So if you're buying stocks directly, you buy quality stock. So you don't buy, run of the mill company or things that tipsters provide to you or something that you've got on your WhatsApp forward. So those are not the things that you should be buying. You should be evaluating good quality companies and buying those. Second is to diversify. So don't put all your eggs in one basket. That is the saying, right? So that same thing applies to equity investing also. So don't buy just one or two companies. Don't put all your money in a very few sectors or a very few companies in a particular sector. Diversify across sectors, diversify within sectors also. So diversification is the way you manage company specific risks, because everything cannot go wrong at the same time. राइट. सो अगर एक कंपनी नहीं परफॉर्म कर रही है तो दूसरी कर लेगी. सो इन योर ओवरऑल पोर्टफोलियो देयर कुड बी सम लगार्ड्स एंड देयर कुड बी सम हु आर मेकिंग मनी फॉर यू. नाउ वी कम टू द सेकंड रिस्क, मार्केट रिस्क. तो मार्केट तो किसी के कंट्रोल में है नहीं, तो आप इसको कैसे मैनेज करेंगे? सो द बेस्ट थिंग इज टू गिव इट टाइम. जब हम इक्विटी इन्वेस्टिंग की बात करते हैं, वी ऑलवेज से दैट डू नॉट इन्वेस्ट इन इक्विटी मार्केट्स इफ यू हैव अ वेरी शॉर्ट पीरियड इन विच यू नीड योर मनी. So the reason is that the returns in equity markets are not linear. right? So let us look at certain examples. So this, I have picked up a data of Sensex over different periods of time. If you see the first graph, it is from January 1st, 2000 to December 31st, 2000, right? So if you see this graph, on the left side, we have the level of the Sensex, and the right side, the axis is here is the time period, right? So in the beginning of the year, the Sensex was around 6,000, and by the end of the year, it had fallen to 4,000. So that's a huge fall. So this happens. This is the nature of the market. Again, we saw the same similar kind of behavior in Jan 2008 to 31st March 2009. It went from 20,000 to 10,000. That's a 50% fall. So markets do crash. Then there is this period which we are looking at, 1st Jan 2011 to 31st March 2013. So if you see, during this period, it's more or less flattish. It went down, but it came back to the same level. So if you have invested money, probably in Jan 2011, maybe things wouldn't have moved for you. You are at the same level on the Sensex. If you have invested in the index, it has not gone anywhere. What happened in COVID was pretty drastic. It fell off 50%, almost 50% in 1 month. The day, March, when things were announced, it drastically fell. So this is the way equity markets behave. You really cannot control it. So the only way you can control it to make money is to have a longer period of time given to equity for growth. Now these were individual periods which I have picked up. So data को तो हम किसी भी तरह से तोड़ मरोड़ के दिखा सकते हैं, but overall क्या होता है? Let us look at the entire journey of the Sensex. ये Sensex 1979 में शुरू हुआ था. You see the entire journey till last month, till September of 2023. So if you see this growth, इट इज इंपॉर्टेंट टू अंडरस्टैंड कि इस ग्रोथ का बेनिफिट लेने के लिए आपको इतना समय देना पड़ेगा. इफ यू विश कि आपको सिर्फ ये अप वाला लेवल मिले और डाउन वाला ना मिले, इट डजंट वर्क दैट वे. So you will have to live through those periods which it goes down, where nothing happens for a very long period of time. All these periods you will have to live through to see the money growing to that level. So that is what you need to understand. Now, when we talk about managing your own behavior, how do you do that? So one is you need to understand your risk profile. So risk profile पे हमने पिछले साल I think एक सेशन डिटेल में किया था. So broadly 3 चीजें हैं कि आपका इनहेरेंट रिस्क प्रोफाइल क्या है. मतलब आर यू अ कंजर्वेटिव इन्वेस्टर, आपको डर लगता है अगर मार्केट्स परफॉर्म नहीं कर रहे हैं और आपका पैसा लगा हुआ है. सेकेंड चीज, अगर आपकी कोई रिक्वायरमेंट है जो बहुत शॉर्ट टर्म में है, इफ योर चाइल्ड इज गोइंग टू कॉलेज से नेक्स्ट ईयर, you really cannot afford to take the risk of equity markets, because if the markets, as we saw COVID के time का जो हमने graph देखा था, the market falls, so that could happen any point of time. You can't afford to take a short period risk. So that is how much risk can you afford. And third is how much risk is required. कि अगर आपके goals बहुत बड़े हैं, you cannot put everything into fixed income. आप FD में पैसा डाल के या debt products में पैसा डाल के उतना corpus नहीं बना पाएंगे. So your risk required will be a little larger to get that kind of return. So that is the 3 parts of a risk profile that you need to understand. You have to define and understand your goals and time frame. बहुत लोग सोचते हैं कि it is very easy to pick up stocks and make money, but unless you know what your time frame is and what are you saving for, it is very difficult to even judge when to get out of the market, right? And third most important thing is that you have to watch out for the biases. So biases could be herd mentality. Generally हम ऑफिस में बात करते हैं कि अच्छा आपने मेरे फ्रेंड ने ये ले लिया है या यू इस प्रोडक्ट में इन्वेस्ट कर लिया है, ये स्टॉक पिकअप कर लिया है. So you just go and buy that without understanding the reasons. Each person can have a different reason for buying something. You need not follow blindly. You need to evaluate whether it is suitable in your condition. Second, I think thing is the confirmation bias. कि अगर आपको लगता है कि आपके पास कोई न्यूज़ आती है, that a company is going to do well. So as individuals, we tend to have a bias where we look out for news favoring what we believe. We don't look at something which is negating our beliefs. कि हमको लग रहा है कि ये company चलेगी, but we don't look at why this company could not perform well. So you have to look at both the sides of the thing and then decide, both positive and negative views, and then take a informed decision. And I think FOMO is something which happens very often, and especially these days where we see, all news is coming, all social media is giving you so much news. So fear of missing out on making that profit. So when we see our neighbors and our friends making profits, we also want to be a part of it without understanding that probably they have been in the journey longer. Like we saw,
True.
individualistic periods, will not give you that kind of return. You have to hold through that period. Now, when we talk about managing our own behavior, just think through what will your behavior be if you were in this period, if you're holding stocks in this period, when it fell from 20,000 to 10,000, a 50% fall. Will you be afraid and will you withdraw your investments? A lot of people who say that I will never invest in equity market behave this way. They take out money when the market is falling and they burn their fingers because they are on the downfall. They are selling where they're making losses, and they will probably come and buy when the markets are rising. So when we get the maximum, investments are closer to these peaks, if you see. So if you see, these peaks are when people say that, okay, I think I should get in. So there is a typical graph which happens in greed and fear kind of a cycle, where there's optimism, people sit on the sidelines and watch. There will be some euphoria. That is when the greed comes in, that I need to be a part of this. There is this fear of missing out and people buy. Whereas this is the worst time to buy because it's already euphoric markets and there is a higher chance that there will be a fall in the market. And when the market starts falling, people have very short memory. They forget that these are cycles, it will turn. So actually you should continue buying through these cycles, and that is when you will make profit. So generally what happens is, because of greed we buy here, and because of fear we sell in this area. Whereas it should be the reverse. You should buy more when the market has fallen, and you should sell in case the market is very high, or you should continue to hold for a longer period of time. So this is our own behavior which has a major impact on the kind of returns that we generate from it. Now, let us come to role of mutual funds. So why I bring this up is because of all these risks that we saw. Mutual funds provides a very simple and very cost-effective way of living through those risks and making money. So mutual fund industry is very well regulated. It comes under SEBI, and the regulations are pretty tight. The mutual funds have a trust structure, so nobody can run away with your money. So your money is safe that way. Mutual funds by nature itself, each scheme, say if you're investing in an equity mutual fund, each scheme has about 50 to 70 companies or even more in certain cases. So within the scheme itself, you get 50 to 70 companies in which you are investing. Even if you're putting an SIP of 1,000 rupees, you get the diversification. Vis-a-vis, if you have just 1,000 rupees to invest, you can buy very few stocks of one or two companies, not more than that. Sometimes not even that, because the cost of one individual share could be much more than that. So it's a very simple way to get diversification. There are professionals who are managing the funds. So the professionals understand, details better, technicalities better. They will be better at picking stocks. And if you don't want the professionals to pick stocks for you, you can always have the benefit of investing in index funds. You just buy the whole index. So even that bias which professionals might have can be eliminated. Then there are tools like SIP, that is Systematic Investment Plan, and STP, Systematic Transfer Plan, which are available within mutual funds. So what these do is, when we were talking about, diversifying the market risk, we were talking about investing over a period of time. So SIPs and STPs are basically investing on a regular basis, irrespective of the market, where the state of the market is. So you build in that discipline, and these tools are automated. I mean, you can pretty much automate the entire thing, and you don't have to think every time you're investing. So because of that discipline, because of the longevity of investments in SIP, you will eventually, reduce the risk of market timing, reduce the risk of cycles pulling out at the wrong time, where we saw the greed and fear cycle. So all that can be taken care of by using tools like SIP and STP. So I think mutual funds provide a very good, strong way to invest in equities for most people. Only those people, I feel, who understand and who have the time to devote to investment in stocks directly, to study about it, should go for that. Otherwise, most people should opt for mutual funds because that's a much more cost effective and simpler way to invest in equity. Now, of course, there are operational aspects, so I'll just touch upon this. So securities market has a common KYC application. So once you do your KYC with any SEBI intermediary, your KYC is valid across anything. So whether you go into mutual funds or you buy stocks, the same KYC is valid. So KYC is basically know your customer. So your PAN and your address proof is the key. So these are the two things that you will need to submit. So you become a participant in the equity markets after doing your KYC. Now, if you want to buy stocks, there are three accounts that you will need to have. One is a bank account, one is a broking account, and one is a demat account. So the bank account obviously is for providing money to buy the stocks and receiving money when you sell the stocks. The broking account is where a broker places order on your behalf in the market and does the transaction for you. And the demat account is the electronic version of your holding of your shares. So basically, when you buy the shares lie in your demat account. You can sell it directly from there as well. So it is an electronic form of holding shares. Earlier, we used to have physical share certificates, but now physical share certificates are not issued. Even in transmission and all, where the holder of the share certificate has passed on, so they can transmit it only in demat form. Now physical transfers of share do not happen. It has to be done in the demat mode. For mutual funds, the operational aspects are basically similar. I mean, the KYC has to be done. You can buy mutual funds under the direct plans or under commission products, which are sold by mutual fund distributors. So direct plans should be used by people who either understand what to buy and can manage funds on their own. So you can go to the mutual fund websites and buy it directly from there. Or there are providers in the market who provide, platforms that provide direct funds as well. Or you can go through a SEBI registered investment advisor who will advise and you can buy in the direct plans. For all others who want to go through the mutual fund distributor, that plan is also available. So इतना सारा ज्ञान दे दिया हमने, इतनी सारी बातें करी, बट आखिर करना क्या है, आखिर आप कहना क्या चाहते हैं? So simple thing, understand your risk profile कि आप इस रिस्क के साथ रह सकते हैं. Once you understand your risk profile, then step into this equity market. Otherwise, you are better off not being here. Define your goals. That is extremely important. And use equity only for your long-term goals. So your short-term goals should be typically provided by things which are not volatile. So basically, debt-oriented things should be used for shorter-term goals. Typically, we say long-term goals as in anything above 5 years is something that you can look to fund through the equity route. So that is the time that you should be giving minimum in equity markets. Longer, the better. Right? And you should deal only with SEBI registered entities, because there are a lot of fraudulent entities in the market who might take you for a ride and make you lose your money. So as long as you're doing these 3-4 things, you should be fine dealing in equities. Thank you so much. These are some resources which are provided. So if you want to know more about things, you want to find the intermediaries, you can go to these websites. There are a lot of good videos on the NISM website, the NCFE website, which are again industry, regulated part of the industry. So you can go and get more information on this. Thank you.
Super. I think you need to grab a glass of water, Kiran.
Yeah, I'll do that.
No, but this was so comprehensive and so good, and especially for beginners, I think you simplified it by not using big jargon. And, I think it's more about the temperament really in the beginning, as you rightly said, that, you get in if you feel you have the temperament for it. And if you want to sort of diversify your portfolio and see if you want to invest some money here. Some very interesting insights there. But, one generic question that comes to my mind is that, Kiran, historically people have feared the stock market, right? एक डर बैठा रहता था लोगों के दिलो दिमाग में कि यहाँ पैसा जाएगा तो पैसा जल जाएगा या पैसा अटक जाएगा या a lot of things that were in our films also they would show it like that. But how has this market really evolved over a period of time? And today it's not actually seen as a very risky proposition if you are playing your cards right. So how has this changed? I mean, we did see that chart that you had put up, but just a question about how have things evolved, and has it become safer now if you are more careful? What would your thoughts be on that?
That's a great question, Mugdha. So definitely there have been, huge changes. In fact, our stock market probably is the best regulated and, the most digitally sound platform across the world. I mean, even better than some Western countries, I would say. So what has changed is in 1991 when there were major changes in the Indian economy because of the regulators and other things coming in. After that, things started changing gradually. Then SEBI came into existence. So once SEBI came into existence, a lot of things were put into place for safeguarding the investor. So gradually, though things became tighter for the participants who were, either intermediaries or even the companies, because of a lot of documentation that was happening, the place came started
Right.
becoming safer and safer for the investor. So as long as they are dealing with the SEBI intermediaries, as I mentioned, it is pretty safe to get into the equity market. And the change also happened, I think, from the society side. So earlier we were pretty much a society that used to invest in traditional products, say bank fixed deposits or
Right.
company FDs or real estate or maybe gold. So those are physical assets rather than financial. So from there, gradually shift is happening towards financial assets, and equity obviously is a big part of it. And we are still a long way away from coming at par with what banks have in terms of fixed deposits.
Mm.
But yes, there is definite movement towards equity. See, because what also happened is earlier, as we were growing as a nation, there wasn't much in hand available to invest. So whatever there was, people wanted to
True.
play very safe with it. There weren't many options
Yeah.
available. So that safety net has been built, I think, for the current generation, so they don't have to fend for the very basic things.
Mm.
So I think that generation has that generational change has happened. So I think it's a good growth that has happened over the years.
You did mention about when you start your journey, what are the things that you need to keep in mind. But if we look at it from a very age specific point of view, and also look at it from people's financial planning point of view, how should they place their equity portfolio?
See, the thumb rule says that age, 100 minus your age is what you should have in equity, but that is just a thumb rule. Uh,
Mm.
how you should look at it is first start with defining your goals. So typically for a younger investor, say somebody who's just starting off in their first job, there could be few
20,
goals which will
right
be
at the age.
20, 20, 22 probably, after graduation. So
Mm.
for that kind of a person, the risk of losing money is very low because the income itself will be very low. So the amount that you're investing is small, so you can consider it as the loss if it happens. You can consider it as a learning, fee that you're paying for learning. So the risk is much
Correct.
lower. But if you compare this to somebody who's closer to retirement, who's built a nest egg, and that money is being put at risk, so the risk is obviously much higher. So there you have to be a little careful of what proportion goes into equity. Yes, definitely there, as I mentioned, there needs to be some equity which is there even at retirement or even at a later age. That is one way to look at it. Second way is that what are the type of goals that you have and what is the kind of corpus that you have in hand. So if for a
Mm.
youngster who's just starting off, see, typically what happens is the first 10 years of your job, you're just trying to understand things. Money is never taught in school, so we don't know how to handle money.
Yeah.
So those first decade is lost in understanding what to do with it, what are things, and in that time, sometimes you are so afraid of things, you tend not to invest. Also, sometimes the money is just lying idle.
Yeah.
So instead of doing that, use simpler products like mutual funds and all for your core portfolio. Keep building that, and if you want to learn new things, keep a small amount which you can afford to lose for learning those new things. So keep that aside. As you progress in life, you will start understanding what is money, start working with advisors who can probably guide you in a better manner. Or if you have the time to spare, there is a lot of financial information available. There are a lot of courses which you can do. Start understanding that and managing your money. So I think in that manner, you have to take a nuanced view of investing in equity age wise, as you age and as your goals and your responsibilities keep changing over your lifespan.
Noted. Um, what are the best ways to educate yourself? Any recommendations, apart from the sites that you mentioned? Are there any books, or what are the good sources? Because, a lot of times we see that while financial planning is an important aspect, and I can't stress on the importance of going through an investment advisor, but then there are so many fin influencers these days, and they are operating in an unregulated market. So a lot of people start to watch them and start taking decisions based on that. But what are some authentic sources of education?
Well, you're right. So there is a lot of material available on all kind of media that is being pushed out. Not all of it might be genuine. There are some which are very genuine. So I will not be able to name a few sources, obviously, from the influencer side. But as far
Yeah,
as learning through books or learning through courses goes, people can check out the NISM websites. There are certain courses which are available. Even the stock exchanges, NSE and BSE, both put up short-term courses also, which you can use to learn about things. There are
right.
written material also, which is available on SEBI website. Mutual Fund Sahi Hai website is a good place to look for it. A lot of AMCs, basically the mutual fund companies, on their own website have a lot of data and information for investors from where they can understand the basics. Once the basics are in place, then you will be able to figure out for yourself, what are the good sources to go to take further information. See, also because for most people, investing probably is not their primary job. That is something that they
Right.
need to do to meet their goals, but they are primarily involved in their own profession or in their own jobs or businesses, so they might not have time to do the in-depth courses. But these basic
Hmm.
understanding of things coupled with working with advisors could be a good way. At least you'll know what questions to ask. So if you don't know what to
Correct.
ask, you might not end up getting the answer. So once you have the basics in place, you know your own personal situation. These two together can help you get to the right questions to ask, and then you can take it from there.
Hmm. And the ones who actually want to learn trading properly and want to do the more technical stuff and the more complex stuff, what would you suggest for them?
See, there are full-fledged courses like you can do your CFA, you can do your Certified Financial Planner course, the CFP, which has some bit of investment, not trading per se. The stock exchanges have a lot of courses on trading and other such things. Even NISM runs short-term courses sometimes, which are available, certificate courses which you can do. So these are authentic sources where you can go and learn more about investing and information. A lot of colleges these days are offering courses in investment and related matters. So you'll have to search for your particular choice of university or your area colleges. So a lot of them are offering these kind of courses.
Say somebody who's watching today. By the way, before I ask the next question, please type in your questions. We have few more minutes, so we will start taking those as well. So while you're punching in your questions, let me just put this to Kiran. Kiran, आज के आज अगर किसी को अपनी जर्नी शुरू करनी है, तो वो कितनी जल्दी अपनी जर्नी शुरू कर सकते हैं, या कितने दिनों में वो शुरू कर सकते हैं, और उन्हें बेसिक टू बेसिक करने के लिए किन चीजों की जरूरत है? आई रिमेम्बर यू मेंशन्ड द 3 अकाउंट्स. क्या वो अकाउंट्स एक ही बैंक में खुलते हैं, क्या वो अलग अलग उसमें खुलते हैं? थिंग्स लाइक अगर आपको SIPs अगर शुरू करनी है तो आप किससे पूछ के कर सकते हैं, या कौन सी वेबसाइट पे कर सकते हैं? तो आज के आज अगर किसी को अपनी ये जर्नी शुरू करनी है आज और अगले 2-3 दिन में, तो क्या क्या कैसे कर सकते हैं? एक क्रोनोलॉजी आप अगर दे दें.
ओके, सो अगर आप स्टॉक्स में इन्वेस्ट करना चाहते हैं तो यू कैन आइदर गो टू योर बैंक्स, वट एवर बैंक यू गोइंग टू. मोस्ट ऑफ द बैंक दीज डेज ऑफर 3-in-1 अकाउंट्स. तो आपका ब्रोकिंग बैंक अकाउंट, ब्रोकिंग अकाउंट एंड डीमैट एक ही जगह खुल जाएगा. सो आइदर इट इज विद इन द सेम इंस्टीट्यूट और देयर बी group companies which are there. So all three can be opened at one place, right? So 3-in-1 accounts are available. So you can check with your bank, or you can go to any broker who is available. They will provide you with these kind of services. तो ये तीनों चीजें एक जगह हो सकती हैं. जहाँ तक म्यूचुअल फंड की बात है, यू कैन डायरेक्टली गो टू द म्यूचुअल फंड कंपनीज वेबसाइट एंड इन्वेस्ट ऑनलाइन का ऑप्शन सभी ने दे रखा है. सो यू कैन गो देयर, यू वांट टू इन्वेस्ट, यू जस्ट क्लिक ऑनलाइन, आपका KYC हो जाएगा. ई-केवाईसी के लिए आपको आधार, पैन और डिजिटल सिग्नेचर की ज़रूरत है, तो वो सारी चीज़ें आपको वहाँ पर मिल जाएँगी। इट इज़ अ वेरी सिंपल प्रोसेस। सो यू कैन डू योर ई-केवाईसी एंड यू कैन स्टार्ट इन्वेस्टिंग इमीडिएटली। सो इट इज़ एज़ सिंपल एज़ दैट। और इसके पहले जैसे
Right.
मैंने कहा प्रिपरेशन करना ज़रूरी है। दीज़ वर द ऑपरेशनल एस्पेक्ट्स।
Yeah. All right. Now let's see if we have questions so we can start taking them. All right. Priya Shah is asking, so many apps are available in the market for investing. Are they safe for us? Good question.
गुड क्वेश्चन प्रिया। सो बहुत कंफ्यूजन है मार्केट में, बहुत मुश्किल है जानना क्या जेन्युइन है क्या नहीं है। सो अंडरस्टैंड वन थिंग, दीज एप्स आर द थिंग्स दैट आर मेकिंग योर इन्वेस्टमेंट journey easier, but they are not some thing that is offering you a good choice or a decision on where to invest. So it is only about how to invest. So it is a platform that is offering you about जो मुग्धा ने अभी पूछा था कि किस तरह से मैं शुरू कर सकती हूँ. So that is only a platform for investing. Though they might be giving you research reports, or they might be providing you ideas for investment, it might or might not be good. So बहुत मुश्किल है बताना कि क्या सही है क्या नहीं है. Better work with an advisor, so at least you know one person whom you can deal with, because apps are mostly faceless. तो कहीं कुछ प्रॉब्लम हो जाए, कुछ पूछना हो तो you wouldn't know whom to go to. So in case you are in that bracket where you don't understand technicalities, it is better to work with an advisor.
All right. Bhavika Mittal is asking, I would like to know, please, what is the Grow Nifty Fund all about? Is it worth it?
Bhavika, I'm so sorry, but I cannot really comment on any specific schemes or any specific products, because this is an investor education program and I'm not permitted to, answer such queries.
All right. Niharika is asking, what taxes do I need to consider if I invest in stocks?
Great question, Niharika. We can't forget taxes, right? So,
Yeah.
as we were discussing, there are two ways in which you make money in stocks, or even any other equity investing, whether it's is through mutual fund or through PMS and other such things. One is the dividend thing. So the dividend is income. Dividend income is taxable in your hand. So whatever dividend is coming, that is added to your income, and you have to pay taxes as per your tax slab. As far as the capital gain goes, there are two brackets. There is short-term capital gain and there is long-term capital gain. So in short-term capital gain, it applies when you sell a particular stock within 12 months of holding it. So that is charged at 15%. Beyond 1 year, if you're holding any stock and you're selling it, it is charged as long-term capital gain, which is 10%. Now, there is an exemption of up to 1 lakh in case of लॉन्ग टर्म कैपिटल गेन. तो आपका जो फर्स्ट 1 लाख है उस पे एग्जेम्पशन है, उसके आगे आपका जितना प्रॉफिट बनता है दैट विल बी टैक्सेबल एट 10%. सो दिस इज अक्रॉस all equity products. So basically, whether it be stocks or equity mutual funds, everything clubbed together, 1 lakh is exempt. उसके beyond आपको 10% पे पे करना होगा.
All right. So Kanya Chanda is asking, what factors influence a mutual fund's performance over a period of time?
Interesting question, Sukanya. So see, mutual funds are of various kinds. So mutual fund by itself, I mean, it has some 36 categories of schemes. So it ranges from overnight funds, which are primarily debt funds, to sectoral and thematic funds, and everything in between. तो अगर हम हर एक कैटेगरी का देखें तो परफॉर्मेंस जो रहता है, इट इज dependent on different factors. So since we are talking on equity investing today, let me just take the equity bit of it. So obviously, because it is an equity mutual fund, the underlying is stocks. So the movement of the stock market does impact it. Now, whether you are buying within the equity fund, whether you're buying an index fund, or you're selecting, different categories, say it can be a large cap, it can be a mid cap, or it can be a flexi cap fund, or it can be a particular sector, say for example, pharma sector or IT sector fund. So how the stock market is performing, how that particular sector is performing will impact the performance of the mutual fund. So if you are in an index fund, say if you buy a Nifty fund or something like that, or any other index which is available, if there is a fund which is replicating that index, the exact performance minus the tracking error, that is the kind of return that you can expect in that fund. If you are in a particular sector, if that sector is not doing well, the losses will be reflected in the fund. So this is how, depending on what kind of equity mutual fund you are selecting, the fund's performance will reflect the stock market performance.
All right. Let's take a few more questions. Abhinav Singh is asking, what are the key factors to consider when choosing stocks for an equity investment portfolio?
Well, this is like a very, very broad question. See, there are a lot of factors. So, starting from where do you see the company's future performance? So, how will you value the company? Where is it today and where do you see the future? So, valuations can again differ. I mean, there are technical aspects to it. How do you value a company? So when a company IPO is being launched, there are discussions on valuations that happen, whether it is worth the price that they are quoting. So whether it is an IPO or whether it is in secondary market, whenever you're buying a stock, you need to see the valuations of the company, whether it is expensive today or whether it is cheap today. And again, what do you think that the future performance will be? So sometimes when you are looking into value investing, you might think that the companies are cheap today, but there is a chance that they will do well over a longer period of time in sometime in future. So in that scenario, you buy that stock, you might go wrong also. The cheap things might continue to remain cheap, whereas something which is say very expensive, and you decide not to buy it because it's very expensive, it might still keep going up. So there is no one way to decide whether you should or should not buy, but valuation is a key parameter to selecting stocks for an investment portfolio.
All right, Abhinav, I hope that answers your question. And let's take a few more. All right, Swarnima Bhattacharya is asking, is there any equity investing in gold and is it advisable? What's the best way to go about it? थोड़ा सा confusing question है.
स्वर्णिमा, हाँ यार, ये थोड़ा सा कंफ्यूजिंग है.
हाँ.
इक्विटी इन्वेस्टिंग में गोल्ड, आई डिड नॉट रियली अंडरस्टैंड दैट.
Yeah, if you're asking about investing in gold, then of course that's a different question. But equity investing in gold is a little. Maybe you can rephrase and.
Yeah, if you can rephrase and put it across again, yeah, we'll take it up.
Yes. Yeah. And all right, भावना का ले लेते हैं तब तक सवाल. Equity marketing. How can equity marketing and investing play a key factor in building a new brand's value?
Well, I'm sorry, but I again don't understand this question. I mean, this is about brand valuation.
Yeah, so I'm guessing it is, how can equity marketing and investing play a key factor in building a new brand's value?
I think it's more to do
थोड़ा
with
सा
branding. हाँ, ये थोड़ा सा मतलब it is not a question that is
ये
my area of
equity.
expertise. Yeah. Okay, Chitra, interesting. So
All
some
right.
tips for saving in
Savings in
20s. I think, yeah, we had done a full session on this one, but I'll just briefly tell you. So try and save as much as you can. That is the simplest advice that I can give on this question. See, in 20s, you don't have much responsibilities. So whatever you're earning, it is all yours to spend or save. So as I said, the first decade might just be lost in understanding or just having fun. Try and avoid that. Try and save as much as possible. Keep at least 10% of your income. So अगर आप 100 कमा रहे हैं तो 10 रुपए आप साइड में रख दीजिए, 90 से आप अपना खर्चा चलाइए, and expand that 10 rupees to whatever 10% to whatever maximum that you can expend. I think this is the best thing that can happen, because people generally try to see what will give me the highest return, but they forget that what is the highest amount that I can invest, I can save and invest. So I think that plays a higher role than figuring out which is the highest return product.
All right. Few tips for beginners. I'm always scared of investing in stocks. ये तो मैं भी बता सकती हूँ. SIPs.
Yes. Sonali, that would be a good way for you to go, because see, understanding stocks is a very technical subject. And if you don't understand and you buy on tips, you might end up losing money. So it is better to go through the mutual fund route, go through the SIP route. It is simpler. It's, drop by drop, you'll make the ocean.
All right. I think last question we have. I'm a novice working professional. What are some equity investment options that I should look into? Again,
Yeah, and certainly the same
answer.
thing goes for you. Yeah, so use the mutual fund route. That is much simpler. And once you get a hang of how things are, and probably you can devote
Yeah.
some time to understanding stocks, then you can probably step into investing in direct stocks. So for initial beginning period, if you're not understanding that, if you're not a professional in finance, or if you're not working with an advisor, jumping directly into stocks might be a little more risky, I would say.
All right. Looks like we have exhausted the questions for today. It was a long session, and I hope it has been informative for everybody attending the session today. Thank you so much, Kiran. Always so lovely to speak to you. You simplify
Thanks,
everything
Mugdha.
so difficult so beautifully.
Thank you, Mugdha. It's a pleasure always to be here. Thanks so much.
Thank you, and thank you everybody for joining us here on She the People. Invest her in partnership with BSC Investors Protection Fund. चलते चलते एक बार फिर से हम आपको वो महत्वपूर्ण और important सलाह देते चले जो हम हमेशा देते हैं, which is that you should always look at these discourses and these episodes as our bid to educate you. But when you are actually making your investments, when you're looking at putting in your money, do get in touch with a SEBI certified investment advisor. They will have the best plans for you. They will protect your money. They will suss out what your risk appetite is and how, where in your financial life are you at, and will help you make that decision. So happy investing and have a wonderful week ahead. Thank you so much for joining.
Thank you.